I don't really like annuities, but I do like, he doesn't need to do this. He doesn't need the money. And he wants to be able to make sure income stays the same. Is they're very, very flexible. Hey there, John Stevenson, the Guaranteed Retirement Guy. Thanks for tuning in today. I am sitting here next to this creek here, and it's a beautiful day. And I'm going to be talking to you about one of my clients who is 83. He's got several $1 million. He's on a second marriage. His first wife died after, I think, 40 years of marriage, and he remarried, and he wants to take care of his second wife because he's 83 and she's 78. And he's like, I want to make sure she has enough income, and if I die, she's going to lose $100,000 because his pension. So his pension is only a single payout, I guess. And so, anyways, I guess when it comes down to that and the rest of their investments, that's how much she would lose. And he wants to be able to make sure her income stays the same. So right now their income's like $250,000, so he wants to keep it at $250,000. And so in order to do that, he needs to buy an annuity for her. And so we're looking at $1 million premium, and which is a very small percentage of their assets. And he's not doing this for growth. Like he was just telling me, it's like, look, I like the market. I like being in stocks and growth products. I've always done that. I don't really like annuities, but I do like the contractual guarantees that they provide, because she'll have the income. She can flip it on whenever she wants. And she's good. Like she doesn't have to worry about trying to manage our accounts or anything like that. And so anyways, we're looking at $1 million, and he's 83. If he dies in 7 years at 90, she's going to be able to turn on $149,000 in lifetime income. That's just phenomenal. So if he dies tomorrow, she's going to be able to turn on $103,000 in lifetime income. So either way, she's good. She's covering herself, with a relatively small percentage of their assets. So what I like about this is it's an income rider, and it's with Nationwide. And Nationwide, with this income rider, they allow you to activate income anytime you want. And so that will be the case for her. She might activate income in a year, 2 years, 3 years, 7 years, or maybe he'll be lucky and he'll live to 95 and she'll activate income later than that and get $200,000 in income. That's what's so nice about these contracts, is they're very, very flexible to the person. And so she can activate income whenever she wants to. And it's as simple as calling the company up and say, hey, I'm ready to start income. And they'll say, okay, here's the paperwork. It's 4 pages. Fill it out, put your bank account information, and give us the date on when to start putting income into your account. It's that simple. Okay. Otherwise, I can give you the forms and I can help you with it as well. So anyways, I love this because he's doing this for his wife. Okay. He doesn't need to do this. He doesn't need the money. And he could just leave her a lump sum and she could deal with that and make income with it as well. But the reason why he's choosing an annuity contract is because he wants the contractual guarantees that they provide. He wants the simplicity of being able to just activate the income, have it come in like clockwork, and then she can just leave their other assets where they are. She doesn't have to mess with them. So I really like that. I think that's important to note, because so many people focus on growth, okay? And they focus on annuities are bad because they don't grow. And Susie Orman said this, and Dave Ramsey said this. But we're not focused on growth with these. There are some growth products. I do like them. Like there's a Lincoln fixed index annuities in Delaware and National Life Group ones that I like. And there's some really good MIGAs out there, the fixed rate products that are paying like 5 and 6%. Those are great for growth. But when you compare or contrast that or compete with the stock market, you can't. The stock market always beats it. But these are safe money investments. They're for protecting your principal. They're for protecting them and then giving you some growth, not all of the growth. And it's okay to do that. Okay, it's okay to have some of your assets in safety and to have protection and not have as much growth in those. Okay, you can still have decent growth, but not have as much. Okay, there is value in that. Okay, it's not just always about highest growth, highest risk, highest growth. And so many people focus on that, and they will just label a product as horrible because it can't compete with another one based off of just simple growth factors. Like there's so much more to making a decision than just that. So anyways, I wanted to share this because he is a savvy investor. He knows what he's doing. He's got lots of money, and I could tell he can handle their money, and he could handle their income requirements for as long as he lives. But that's the problem. It's for as long as he lives. And so he's trying to make life simple for her, easier for her, and he can do so with an annuity contract. And if she starts paying out $100 grand right now, she's going to get back that $1 million in 10 years. Okay. If she dies before then, if they both die before then, it's not like they're losing the money. Okay. The money is going to go back to their estate, whatever's left. Okay. So it's not like you're like spending it and trying to outlive the insurance company or trying to beat the insurance company. You're setting yourself up for a high lifetime payout. And if you don't use it all, it goes back to your estate. Okay. So it's a win-win. Like, it's not like you're doing a no refund option that some SPIAs have. Like, we're not doing that. So anyways, if you're looking to purchase an annuity for yourself, I'd love to help you. Okay, there's a link below this video. It goes directly to my calendar. We can get on a Zoom meeting and I'll show you everything that's available. Okay, I'll show you everything, regardless of what I'm getting paid. But if you are, if you want to check it out for yourself and not talk to me, that's fine too. Go to my website. Go to johnstevenson.com and you'll see everything that is available there. You can plug in the numbers and see for yourself. And then if you feel comfortable and you feel like, hey, I'd like to have John help me with an annuity purchase, then please reach out and book a call there as well. There's a link there too. So anyways, I'm easy. I won't bite. I'm not going to try to sell you anything, except maybe that condo down in Mexico. That timeshare, right? You love the timeshare, guys. Anyways, I might sell you on coming up to Lake Tahoe, though. Let me tell you. It's beautiful. Even coming up here, just hanging out next to the creek or fishing or whatever. This will be frozen over at some point, and then you can walk on it, do some ice fishing. So anyways, all right. Appreciate you for watching. Again, click the like button, subscribe, share, comment if you got any questions. And until then, we'll see you next time. Hey, I really appreciate you watching the video today. If any of it makes sense to you, or if you found value, or if you even got a question about anything, I hope that you'll go to the comments section and ask it. There's no stupid question, and I'm looking forward to hearing from you.